today we're looking at a stock that is trading for about 1/5 of its fair value. Could be even more than that if they're able to continue on the pace that they're headed. But the company that we're looking at is Epsilon Energy Ltd, ticker EPSN. This is a very small stock. In 2022, they did less than $100 million in revenue, and they came up on the screener just like Insteel Industry did. So I'm digging through those looking. There were two that I had to throw out because they didn't meet all the criteria. They weren't really good, showing small growth in the top lines and bottom lines. But this is another one that is showing good, probably growth that it can manage to hold on to. This isn't any insanely massive growth, with the top line growing 37.8% year over year. It's been picking up a little bit more recently, and then the earnings have been picking up, growing 68% year over year. Just the past few years, they've 6x'd their earnings. So this is definitely one that I want to keep an eye on. No analysts cover it. I can't find any guidance anywhere. So I just have to go based off projections and how they have done over the last 3 years for all of our 2023 and 2024 numbers. Nothing but green flags here. Their cost of goods climbed a little bit, but it's been on decline recently. Gross profit, massive growth, 68%, in line with their earnings per share. That gross profit percentage this last year was 77.3%. They've been as low as 26.1%, which is still a decent gross profit. It just depends on what the net comes down to. And then we see that their expenses are under control. They've grown quite a bit, 5.3% year over year, but on the decline more recently. Their expenses as a portion of revenue, and their revenue is way outpacing the growth of their expenses. And so we've seen this number go as high as 96.8, and just last year was 33.2, which is incredible. Their net profit, they 5x their net profit in the last 2 years. That net profit percentage has been as low as 3.6. This last year was a high of 50.5, which helps bring their EBIT to 6% growth year over year, 4xing in the last 2 years. And their earnings, we just have to project out based on that 68%. I mean, they had picked it up more recently, growing it the 6xing. They moved it from 3 cents a share. 2020 was a low, and it's jumped up to $1.52 per share. So they really caught their wave in 2021. They caught back on that trend that they left off in 2019, and the market's just kind of ignoring that, because we can see that they went from $3.40 in 2019, $3.71, $5.66, $6.39, and it's currently trading for $5.07. But in that same time frame, the fair values had moved from $6.40 to $4.79 to $12.39. And as of the last year, based off these weightings here, we're looking at $31.50, which is 5 times what the share price was. And where it sits right now, if they can continue on the trend that they're on, we'd be looking at even more growth, moving from $5 to $45. Like, the share price is so low on this stock, it might just be an easy buy for me. Just 100 shares, and I will see where this one takes me, because the balance sheet's in good positioning as well. They've been growing their assets, decreasing their liabilities, have a positive tangible book value that's been growing at about 11% year over year. Their debt to equity ratio has been shrinking, and it's below 0.25. In fact, year over year, that's just been shrinking. So they're on amazing trends here. The book value per share is $4.47 as of the end of last year. So this stock is 60 cents more than their book value per share. That's what they're trading for. And in their earnings, they had mentioned that they are planning to buy back 10% of their shares outstanding this year. So we see that they have been buying them back nearly 5% every year. So 10% is going to be a large jump this year. In fact, I can update this to reflect that. And off that trend, with their book value and their share count, they add a few cents per share. It jumps up to $4.51. So there's definitely a massive margin of safety here with the stock. And I think it's just an easy buy, $500, throw it in, and let it ride. They recently started paying out a dividend. They pay 25 cents a year. They started that in 2022. So, of course, we do not have metrics for that through 2019 to 2021. It's at a current dividend yield of 4.39%. Last year, it was 3.91%. And even that is something that would command over a $20 share value. Personally, where I like to see the company off all these metrics, as of the end of last year, I would have bought it at 29. This year, I'd buy it at 33. A bit lower than the fair values. The market prefers other things than I do, it seems. So we'd be looking at a buy zone of $27 to $37 over the course of this year, and a sell zone of $35 to $48 over the course of this year. And then their cash flow growth is pretty spectacular, just like everything else, growing 203% year over year. Well, we can look at the chart, see what the market thinks about it, and I can't even graph the buy, sell, and hold ranges because I can't go that high up on the stock. That's how undervalued it is. But we see that it came to market in 2007, hit a peak, $16.84 in 2008, and then it dropped way down. By the end of 2008, it was only trading for 45 cents, and it's kind of just slowly ridden up from there. We see actually it hit an all-time low in 2015 at 29 cents. Bit of a dip down through there. Big bid in 2018, jumped up, and it's kind of just riding a wave right now. It looks like it's about to take a reversal and go back green. Both the RSI and the MACD are showing that, and the fact that it is below the volume-weighted moving average, which is $5.27. All of those are telling me it's time to buy right now. So I will probably be picking up my 100 shares today, and we'll see how that goes. $500, it's not a massive investment, but it could turn into $2,500. That would be amazing. And that's all I got for this one. So please like if you enjoyed the video, subscribe if you want to see more, comment what you think about this stock. You're going to be buying some too. Do you disagree with me anywhere? And I'll be sure to get back to you guys. Also, if there's any other stocks that you'd like me to take a look at, just let me know, and I will definitely run through a quick little analysis of them. But thank you guys for watching. I'll catch you next time.